All right, everybody. Good afternoon. Welcome to today's webinar, 3 Techniques to Help You Capture Trades of a Lifetime. I'm Jerry D'Ambrosio. Hope everybody's doing well today. Before I officially get started, I'd like to do a quick sound check just to make sure everybody can hear me okay. I want to welcome everybody joining us either via GoToWebinar or YouTube. But whoever's out there listening, just type in something in the chat box just to let me know that you guys can hear me okay. You can see my screen, and then I will get started. There we go. All right. Matthew says, yep. All right. Awesome. Richard says, okay. If a few of the folks out there can hear me, everybody can. I am broadcasting live from our Charlotte, North Carolina area, a little south of Charlotte. Hope everybody is having a good day. Another tough day in the market. Yesterday was kind of encouraging, right? With the sharp rally that we saw. We always like to see those really strong rallies off of bottoms. Just winded up being, at least for the time being, dead cat bounce. I mean, the markets are all off today. So if you've been following, if you're a VectorVest subscriber, you know that we've been kind of getting you prepared for this downturn for a while now. It's been at least a month or two. I remember doing some of our nightly color guard report videos, just pointing out certain things that we were seeing, a month or so ago, some divergences, and the fact that our MTI indicator got so high about a month ago. So if you're in contra ETFs, you're probably doing really well. I've been in and out and back into a few of them myself. So helping cushion the blow here and make money on the downside. So again, my name is Jerry D'Ambrosio, manager of educational content here with VectorVest. This is our education team. I've been with VectorVest now 16 years, and our education department has really evolved over the years. When I first started, we spent most of our time teaching our subscribers how to use the VectorVest program, how to understand the system, the system of market analysis, the system of market timing, system of stock selection. We spent all of our time teaching our subscribers the ins and outs of the program. How, click here, how to get from one tool to the next. We've evolved over the years into a department now that teaches our clients how to trade, how to invest, how to trade options, how to swing trade, how to manage a retirement portfolio. So really proud of where we've come over the years. And what I'm going to talk about here today is technical analysis. Okay? Technical analysis helps you anticipate what is likely to happen in the future. So we're going to talk about swing to position trading today. We're not going to talk day trading. We're not going to look at any intraday charts. We're going to look at daily and weekly charts, and we're going to focus on a few different indicators. I'm not going to throw the kitchen sink at you, and I don't think that you need to learn every indicator in the book right out of the gate. It's fine if over time you want to continue to broaden your experience and learn different indicators. We're going to just focus on a few at first. And notice how I put that there. Technical analysis can help you anticipate, not predict. It's not about predicting. We're not in the business to predict. Neither are indicators, really. We're talking about anticipation of changes in trend, anticipation of a rally off of a really oversold situation, or anticipation of a retracement off of a level where demand is deemed strong enough to push that price higher, to kind of support it from falling any further. So we'll talk about a couple of different indicators, and I think this will help as well. If you guys stick with me to the end, I will share with you a copy of today's slides. Okay, just somebody remind me at the end. We're going to be together for about an hour. So at about 2:50 Eastern time, just say, hey, somebody say, hey, Jerry, don't forget the slides. I'll put them in the chat box of the GoToMeeting control panel. And if you're joining us via YouTube, you'll receive those slides as well. Okay? So when it comes to technical analysis, when it comes to trading in general, swing trading, I've spoken to a lot of our customers over the years, and they just feel like it's a crapshoot. They're good investors, folks that have been kind of doing this a long time. They understand the fundamental valuation and how to select stocks based on that analysis. But when it comes to technical analysis and swing trading, it requires you to be a little bit more nimble and react quicker, right, than a longer term investor. But they just feel like it's a crapshoot, and they have a hard time identifying the different stages of the market. Okay, and that's going to be a big focus on what we talk about here today. They also say, I just don't have the knowledge. I don't know what I need to know to be a successful swing trader. Never heard of MACD before. Don't understand how to use support and resistance. What is RSI? So all of these really, important technical indicators, that what they do is they help us make better sense of price. If you didn't have technical indicators, it would be pretty difficult to identify price situations, favorable price situations, by just looking at price, because price can sometimes be deceiving. So you have to begin to learn just a few. Again, we're not gonna throw a dozen different indicators at you, but just a few. Okay. Now, when they start to learn the indicators, then they begin to read charts, right? To be able to understand charts better. One of the problems that they find is, man, I'm spending all day, I'm spending so much time looking at graph after graph after graph, trying to identify these setups. All right, I understand what the MACD is, and I understand how to use it, and what a bullish signal is. But I've just spent an hour trying to find, a solid candidate or two, and it's just taking so long. If you don't begin to learn just some really basic indicators that help address different price situations that you may encounter, and if you start to do that and you spend so much time looking for stocks, it's going to become really frustrating. Trust me. When I first started learning about technical analysis, and even in my earlier stages with VectorVest, I found it rather difficult to just go through chart after chart after chart. Luckily, we have some tools that help kind of filter through certain lists to find really solid candidates. So what we want to do is we want to put probability on our side. We only want to trade the best stocks, and we only want to trade the best setups. Not every, for example, MACD crossover is going to be a trade that you take. There are certain other things that do this, that help put probability on our side. Okay? You also want to know what you're doing no matter what the market may throw at you. The market's going to do a couple of different things, and we'll talk about those different things. And you want to get results quicker, instead of spending hours and hours and hours just trying to look, looking through stocks to find the criteria that you are interested in. So there are three main aspects of trading. The first is when, or in other words, what is the market doing? When should I be buying stocks? So we're going to focus in this first segment here on what the market is doing. Okay? Then, once we identify what the market is doing, and it's not as simple as just, is it going up or is it going down? Right? Because there are certain other situations that we may encounter. Next is, again, once we understand what the market is doing, what indicator is ideally suited for that market environment? Because not every indicator is best used in different types of market situations. More volatile markets, I think, like what we're in now, certain indicators like the MACD, honestly, isn't the best indicator to use in a volatile market. You'll see why in a moment. And then finally, how am I going to find my trades? I've done all this work up until this point. I've analyzed the market. I've determined whether I'm bullish or bearish. Based on the market condition, which indicator is ideally suited for that market environment? I need to understand how to use the indicator. And then finally, all right, I understand how to use the indicator. How am I going to find my trades? How am I going to find my trades? Okay, so let's talk about the market first. Okay, the market can do one of three things. It can trend. These are great environments, right? This is a great market for everybody. A nice uptrending market where the markets are hitting higher highs and higher lows. You know, whether you're looking at the S&P or if you're a VectorVest subscriber, you're looking at the VectorVest composite. That's our overall market index. If you're not a VectorVest subscriber, the VectorVest composite is an 8,000 stock index, almost 9,000 stock index. So it combines the Dow, the S&P, the NASDAQ, the Russell, you know, into one. And that's what we use as our market barometer, okay, as the benchmark for our market analysis. So we like to see the market, the VVC, rising, hitting higher highs and higher lows. Traders love it, right? Swing traders love it. Investors love it. Everybody likes a nice uptrending market. Then you get into situations where the market is no longer trending. It's channeling. It's otherwise known as a trader's market. Investors don't like this type of market, right? Because if the market's moving sideways for months and months at a time, you know, your portfolio, your average kind of buy and hold longer term portfolio is kind of doing the same thing, right? It's you're spinning your wheels. You know, there are rallies where you make money, there are retreats where you give it back. Rallies where you make it, retreats where you give it back. And that happens a little bit more often, right, in a sideways market. So traders don't mind it because they will play the up and down swings as opposed to an investor who's just kind of riding it through. And then finally, the market can hit an extreme oversold level. Take a guess as to which market we're in now, right? We are in an extreme oversold market situation, okay? Now, I'm not saying that we are going to rally from here and just this is it, this is the bottom. No, by no means am I saying that. Yesterday, like I said, was encouraging with that sharp rally, but we didn't get follow through today, did we? I'm going to talk about follow through or confirmation, otherwise known as confirmation, and how important that is not only in terms of the market, but the stocks that you're trading as well. You need follow through after a signal. Yesterday, the market actually, the VVC formed a bullish harami. It's a bullish reversal signal, a very reliable one for that matter. Encouraging, a potential reversal signal. Potential has upside implications, but follow through is important. We didn't get that follow through today, and I'm not sure. Again, next week is a big week because the VVC is at a very major support level, which we'll see also once we get into the program. All right. So this is what a trending market looks like. This is the VectorVest composite. Okay, this is the VectorVest composite, and this is an uptrending market. Now this is from February of 17 to February of 18. Don't worry about, how far I went back. I just want you to recognize here and kind of take a mental snapshot of what this looks like. This is an uptrending market. Okay, this is an uptrending market, and in an uptrending market, we want to be bullish only. We want to be bullish only, meaning we want to buy stocks as the market's going up, okay? And we also want to be in position to add to our portfolio after each subsequent high or low, okay? So we want to be bullish. I don't want to be bearish, and I don't want to short stocks in an uptrending market. I mentioned earlier how, I've myself been in and out and in again. I'm in a couple of other contras again over the last month, but the market has not been in an uptrend. We got a confirmed call a week and a half ago or so, and the market started to roll over prior to that. So playing the market up or down as it moves is what traders do. Now going back to what I was saying here, in an uptrending market, I don't want to be bearish, meaning I don't want to short stocks or buy contra ETFs in an uptrending market. I know you look at some of these pullbacks and says, I could have made money there. Well, it might look that way, but things happen really quickly, right, in an uptrend. So what we want to do is be bullish only and buy stocks as the market's rising, and also put ourselves in position when the market does pull back to add to our portfolio after each subsequent high or low. Now, if the market was in a downtrend, I would want to be bearish only. Okay, I want short stocks or buy contra ETFs. So this is kind of just total opposite. So now that was from January of 2017 to January of 2018. Now what we're looking at is January of 2018 to about August of 2018. Clearly, the market is not trending anymore. And this is 8 months, by the way. Clearly, the market is not trending anymore. It's channeling, isn't it? Otherwise known as a trader's market. How do I know that it's not trending anymore? Well, here, that March peak did not take out the previous high, and then we retreated. The retreat, or the low, did not take out the previous low. So we're not in an uptrend anymore, nor are we in a downtrend either, because we are not seeing lower lows. We're just kind of bouncing back and forth, up and down, between the support and resistance levels here. If you're an investor and you're holding through, tough. You make money, you give it back. You make money, you give it back. You make money, you give it back. By the end of the channel, you know, you're lucky to kind of come out unscathed. If you're a trader, you play the support retracements, you play the resistance retracements. You look for bullish candlestick formations at support, bearish candlestick formations at resistance to help identify those true turning points. Okay? And the reason why I'm pointing out, guys, the difference in these two markets in particular is because the indicator that I'm going to teach you guys how to use when the market is trending is not the indicator to use when the market is channeling. It will fail you more times than it will make you money. So it's really important to recognize the market. You have to recognize the market first. Because if you just say, you know what, I don't care what the market's doing, I'm going to use the MACD, well, you might get yourself into trouble because you're not in a more comfortable environment to use the MACD. And then finally, the third market that we'll see is one that will hit an extremely oversold situation. We are there now. The market, the VVC, the two of our market timing indicators were there now. Now, very similar situation than what we saw back in December of 2018, where this was now a downtrending market, right? Lower highs, lower lows. The market's in a downtrend. It was in a downtrend since September. We're talking 3-4 months now of the market falling. Then the market gets to such an extremely oversold situation, and we define that. We just don't say, hey, the market's oversold. We look at two of our key market timing indicators. One of them is the MTI. It stands for the market timing indicator, and the other is the buy to sell ratio. Without getting in too deep, guys, the program explains all it for you. The MTI, when the MTI goes below 0.60, and the buy to sell ratio goes below 0.20. When those indicators get to below those levels, we feel, or we begin to search for a bottom. We feel that upside potential outweighs further downside risk. It doesn't mean that the market can't continue to go down, but if you're weighing that risk-reward profile, when the MTI goes below 0.6, the buy to sell ratio goes below 0.2, we feel that your upside potential, your reward potential outweighs further downside risk. We don't just buy because the MTI, we don't just get back into the market because the MTI goes below 0.6 and the buy to sell ratio goes below 0.2. We wait for that rally, like we saw yesterday. But we wait for the rally, and here, I think it was December 26th exactly, the day after Christmas. Hopefully we get another Santa Claus rally soon. Hopefully we don't have to wait till Christmas. But we got the Santa Claus rally at the end of December 26th. Big sharp up day, big up day. That pattern there is called a one white soldier. It is a bullish candlestick reversal pattern. The one that we saw in the VectorVest composite yesterday was called a bullish harami. Both are very, very reliable. What we didn't see today, but we saw on December 27th, was follow through, was confirmation. Look, today's not over yet. Crazier things have happened. What happened on December 27th is the market actually opened lower than the previous day's close and did move lower during the session, but a rally caused the market to close near the high of the session, and then you could see that was it. That was the bottom. The rally day is important, but the confirmation day is just important. Yes, Eric, this is being recorded. You guys should get the recording sometime tonight. Okay, so we're gonna be looking out for these things here right now, because the MTI is below 0.6 and the buy to sell ratio is below 0.2 right now. We'll get into the program here in a moment. But that's what the market can do. Next, which indicator should I be using for each of those three market conditions? Well, we're gonna talk about the MACD for a trending market. MACD stands for moving average convergence divergence. It has the words moving average in it. If you know anything about moving averages, they are technical indicators that identify changes in trend. They identify trend, true price direction. And when you use multiple moving averages, they help identify changes in that trend. When you have a crossover, a short-term moving average crossing above a longer-term moving average, that's a bullish signal. So MACD is very similar to that. Similar to just using a couple of moving averages as your signal. The point is, it's a trend indicator. So it just makes sense to use a trend indicator, right, in a trending market. When the market is not trending anymore and it's channeling, MACD will not be as effective, right? Moving averages don't work as well in a channeling market. So why would a moving average indicator like the MACD? So we're going to look at and teach and talk to you guys about support and resistance. Love support and resistance, okay? And then finally, when the market hits an extremely oversold situation, we're going to look for, we're going to use our stochastics oscillator. Okay, I'm going to hop into our program now. I'm going to do a lot of our work, guys, in the program instead of slides. Okay, so I'm just going to go to graphs first. We'll take a look at the market in a moment. Well, first off, buy to sell ratio 0.17, MTI 0.57. Both indicators are below those levels, right? So we're going to start searching for a bottom here soon. It's hard, but just pointing out that our indicators are at those levels. That's how I know what the market is doing. That's what I know. That's how I know what phase we're in. We're in an extremely oversold situation. Yes, we're downtrending, but we're in an extremely oversold situation. Okay, and I'm going to go to graphs here. So let's take a look at NVIDIA first. We're looking at NVIDIA, and we're looking at the MACD at the bottom of the chart. We're looking at end of day data over the last 1 year. Okay, end of day data over the last 1 year. And I want you guys to focus on NVIDIA's price behavior. Okay, what is NVIDIA doing over this 1 year time period or 9 months or so? It's trending, isn't it? It's hitting higher highs and higher lows for the last year. Okay, so what I want you to teach you guys how to use is the MACD. The MACD, again, stands for moving average convergence divergence. It is a trend-based indicator. Okay, and what it does is it identifies meaningful changes in trend. Okay, so what we look for is the MACD histogram. Pay attention to when I click on the chart and the values of the histogram over on the left-hand side here. Right-hand side, excuse me. What we look for is the histogram to go positive. That is your bullish signal. That signals a significant change in trend. Okay? A significant change in trend is when the histogram bars go from below 0 to above 0. So I'm going to go through some examples here on a daily chart, just keeping in mind the type of overall price environment that we are in. We're in one that's hitting higher highs and higher lows. So here, We take the trade on February 23rd of 2021 because the histogram goes positive. We sell it here on February 23rd when the histogram goes negative. We buy back. So we sit out the downtrend. We sit out the downtrend. Okay? We don't watch our portfolio unravel, or we don't turn a winning trade into a losing trade. We don't turn a small loser into a bigger loser because we just feel like the stock is going to continue to go up. It might, but let's wait for a better opportunity because you don't know how bad these pullbacks are going to be. Okay? So we enter it back in here on March 17th when the histogram goes positive. Histogram doesn't go negative until April 27th. Good opportunity to make money there. We sit out the downturn. So what are we seeing now? We're seeing higher highs and higher lows, aren't we? Stock pulls back. It establishes yet another higher low. We sit out. I'm not going to short the stock here because remember, in an uptrending market and in an uptrending stock, I want to be bullish only. I want to buy these dips. Okay? Sit out the downtrend, get back in when the stock begins that next leg, when it signals a meaningful change in trend. Get back in on May 27th. We're in all the way until July 8th. What a beautiful trade that was, right? That's what you want to put yourself in position for, the big moves. You may get whipsawed from time to time. Okay, so here we exit on July 8th. We stay out. We don't get suckered in to this dead cat rally here, right? We don't get suckered in. MACD histogram is still bearish. We wait for the change. We wait for the change to go positive, and there it was. I know it was a couple of weeks off of that higher swing low, but the MACD, guys, doesn't identify or is not going to identify bottoms. We're not going to catch reversals using the MACD. It's not designed for that. Eric says, what MACD settings? 12, 26, and 9, industry standard. So we get back in on August 5th. All right, we got whipsawed out. August 11th, we have to get out of the trade. We don't know how bad this downturn is going to be. It may not be bad at all, but we just don't know. So we're going to cut our losses and move on to the next signal. Might buy back at a little bit of a higher price, but that's okay. We buy back on August 23rd. We make a few bucks. We sell on September 7th to September 10th because now the histogram has turned negative. We don't get suckered in. You think, oh man, this is it. I shouldn't have sold because the stock is continuing to go up. No, the histogram is staying negative. Now we're in a downtrend. All right, so now the histogram turns positive, and we save ourselves from watching a winning trade turn into a losing trade. I'm not talking buy and hold investing either, guys. I'm talking trading, right? I'm talking compounding returns, reinvesting your gains into the next position. So here we have a bullish crossover on October 14th. Put yourself in position for those home run trades. What's happening now? Stock's rolling over, but the MACD histogram does not go bearish yet. We're still in it. We don't sell just because the stock price is falling there for a couple of days. Let's wait for our signal. We finally got our signal here, our bearish signal on November 26th, and I'm just going to fast forward, continue, and we're a little bit lower now than we are. Imagine, guys, this market turning even nastier than it is now. Nvidia's stock is holding up, by the way. You know, it's still a good company, but if the market really turns nasty, full-blown correction mode, Nvidia is going to drop hard. And this indicator here saved you from those big losses where you're watching your portfolio completely unravel. Okay. Next stock I want to show you is Micron. MACD is also at the bottom. Now this kind of tale of two different stocks here. I'm going to zoom into this area here first because that obviously is your uptrending environment, right? Higher highs, higher lows. So let's just take a look at the bullish crossovers quick. Here's your bullish crossover. There's your bearish crossover. Buy signal, sell signal. Still in an uptrend, so you just sit out the little pullback. Get back in when the stock starts to rise. May get whipsawed a few times, but the up moves are more profitable in an uptrending environment, ready? Than they are in a downtrending environment. So I don't want to take bullish signals in a downtrending stock. So when did this stock, when did the trend end? All right, let's just look at this as the hard right edge. We're in an uptrend, right? Higher high and higher low. Let's point out when the trend officially changed. Okay, so here we're moving lower. We're still above the low of March 25th. Still above, technically hasn't changed yet. Now it's changed. Now the trend has changed. Now we are now technically in a downtrend. We're not hitting higher highs anymore, and we've begun to hit lower lows. So I don't want to take the bullish crossovers in a downtrending environment, because watch what happens. They tend to be really short-lived. You'll get them, right? You'll get your bullish crossovers, but in an environment of lower lows and lower highs. Again, those rallies in a downtrending environment tend to be short-lived. I don't want to take those. I don't want to take those. Let me show you something cool to help you kind of navigate these longer-term downtrends. I'm going to switch us from an end of day graph to a weekly chart, and watch what happens. During this time, April till about October, downtrend, right? You had these bullish crossovers, but you're in a downtrend. April to October. If I change us to a weekly chart now, that same April to October downtrend, look at what the weekly MACD did. It stayed bearish the entire time. It stayed bearish the entire time. So flip back and forth between a daily chart and a weekly chart to get a better sense of the true environment that you're in. Okay? So in other words, take daily bullish crossovers while in an underlying or a weekly bullish environment, right? So, for example, during this time, when the weekly MACD was bullish, this was August to April. Take the daily MACD crossovers while you're in that underlying uptrend. Does that make sense to everybody? And you can take the bearish crossovers during the underlying downtrend or during the period, very long period, where the weekly MACD is negative. So your weekly chart's going to verify your daily entry. But the point here, guys, only trade bullish MACD crossovers in an uptrend, only trade bearish MACD crossovers in a downtrend, and only use the MACD in an environment where the market is trending. Okay? Next indicator I'm going to talk about is the support and resistance. I love support and resistance. Support and resistance, it's the ultimate crowd mentality indicator. what support is, what a support level is a level in which demand is deemed strong enough to support the price of the stock from falling any further. Okay? It's where buyers see a favorable price entry. Resistance is a point on the chart where supply is deemed strong enough to resist the price from rising any further. Okay? It's where bears come in. It's where sellers come in and begin to push the price lower because they don't feel like price should rise any further from that point. And there are 4 different situations when using support and resistance. There are 2 buying situations and there are 2 shorting situations or selling situations. And right now, actually, let me just go to I want to go to a weekly chart. Now we're looking at a weekly chart. You can use support and resistance on daily charts or weekly charts. I just want to show you this time period here, guys, from September to current, basically, where stock ticker AMD traded in this channel from August of 2020 to about July of 2021. Imagine just buying and holding AMD through that whole year. I mean, how frustrating, right? But what traders are able to do is buy at support, sell at resistance. Buy again at support, sell again at resistance. So that's kind of your basic approach when using support and resistance. Now there are 2 other instances where you can buy and sell. You can buy when price breaks out through resistance. We said that there was that crowd mentality around those resistance levels, right? A lot of selling pressure at those resistance levels. Well, if the price of the stock, and you could see 1 touch, 2 touches, I'm going to even call that 3rd one. That's a 3rd touch, and a softening at that $97.67 resistance zone. But here, the week of July 26th, price was able to overcome that selling pressure. It wasn't able to 3 or 4 times earlier, right, over the last year, but finally on July 26th, price is able to overcome that. That's very bullish. That's a buying indication as well. And you can see, I mean, for the next week, price went from a close of 106 to a close of 110, but a high of 122 that week. So you got your breakout above resistance. A lot of times what you'll see is when price breaks above resistance, it likely comes back down to retest that level, and that level is now support. And that's what it did. So price breaking up through resistance is a buying opportunity. Price coming back down to retest that support level and retracing from it, not just hitting it, not just touching it, retracing from it. I want a retracement off of that support level before I take the position. Okay? Here's AOS, another stock over the last couple of years where you have some pretty significant support and resistance here. Support at 59.03, resistance at 73.43. Finally, though, price was able to overcome that selling pressure at that $73.43 zone and bust out through it. And it did so, watch this. I'm going to add price and volume. I'm going to add volume to it. It did so on some really good volume. Volume at the bottom. We didn't get the retest immediately, although I think we might be seeing that now. Stock has fallen now for the last couple of weeks. We may see that retest. So if you missed the breakout, you're looking for a retest of that $73.43 zone before taking the trade. Okay? And this indicator, I think support and resistance can be used in any market. I talked about how the MACD, and I would really encourage you guys to use the MACD in a trending market environment where you're looking at the hard right edge of either the S&P or the VectorVest composite, and you're seeing higher highs and higher lows. You're at a new high. The previous low is higher than the low before that. So you're seeing, as of the hard right edge of the market, that warrants you to use an indicator, a trend indicator. Okay? In a channeling market, I guarantee you, in this type of market or in this type of stock, where the stock is going nowhere for, this is almost a year, the MACD will not work well. And I'm going to put the MACD on. I'm going to show you guys. Take off support and resistance. Put the MACD on. Look at that. In this type of environment, so here was your bullish crossover. At roughly 60 bucks, and here was your bearish crossover at $69. Okay, so a little bit over 10% there. But you can kind of see when the stock is moving sideways, these indicators are going to whipsaw a little bit too often. You see this area here? Okay. Here's another one. Here's AMT. Now we're looking at a daily chart, daily price bars. Okay. And here's a period now where the stock is moving sideways, right? AMAT, Applied Material, excuse me. And the last indicator I want to teach you guys is the stochastics oscillator. I love stochastics. Stochastics is an oscillator that oscillates between 0 and 100. And the lower end, or the oversold level, is considered to be below 20. Okay, oversold level considered to be below 20. We don't just buy, and the overbought level is above 80. Okay, I'm only going to focus on the buying opportunities or the situations where the stochastics goes below 20. Okay, and we don't just buy when stochastics goes below 20. We wait for the stochastics oscillator to cross from above 20, and we're looking at percent K, to cross from below 20 to above 20. There's your entry. There's your entry. Stochastics goes from above 80 to below 80. There's your exit. Stochastics goes from below 20 to above 20. There's your entry. And by the way, right, this is an uptrending stock. The stock doesn't have to be channeling, or the stock doesn't have to be hitting, or even the market doesn't have to be hitting an extremely oversold level. Stochastics you can use in any environment. Okay, but ideally in an oversold situation, right, where the MTI is below 0.6, the buy to sell ratio is below 0.2, in that environment, when stochastics goes below 20 and you get that rally, and the stochastics oscillator goes from below 20 to above 20, what a buying opportunity. And I've added support and resistance to the chart as well, because you can see, and even a stronger signal is when the stochastics oscillator goes from below 20 to above 20, and you've landed or just pulling away from a support level. Very strong signal. Here was another good signal here. Another retest of this $124.20 support zone, but the retracement off of support and the stochastics oscillator going from below 20 to above 20. Here was another retest of that support level. And here was your entry here off of the stochastics going from below 20 to above 20. Finally, we got our breakout above that resistance level. Look at that. Stock did rally, but look at the retest. We're seeing that live, guys. This is in real time. This is the hard right edge now. So this was a recent resistance breakout and subsequent retest of support. If price falls below $144.16, I would expect it to fall all the way back down towards $124.20 before kind of stopping again. Okay. Lows. Here's a weekly chart. You can use stochastics on a weekly chart. You can use stochastics. You can use any indicator on daily and weekly charts. Here's lows on a weekly chart. Okay. Same concept. You buy when stochastics goes from below 20 to above 20. You sell when it goes from above 80 to below 80. You buy back. Might be weeks, might be months. But you have a little bit more longer term perspective now. You're still a swing trader, but you're kind of extending things a little bit, right? Weekly charts, weekly indicators reduce the noise. They kind of quiet the noise a little bit. But there's our entry there. And there's our exit. We wait, we sit out. We were lucky too, because we were able to get back in right in this area here before the gap up, because the stochastics crossed from below 20 to above 20. Beautiful looking example here. This is a weekly chart. Re-entry, another entry or add to your position. This was the COVID crash. Obviously, that was a good entry. But the signal, guys, was here on March 23rd. That was when stochastics crossed from below 20 to above 20. Just do this for yourself. Put up any stock that looks like lows and throw the stochastics oscillator on there on a weekly chart. Okay? Oops, sorry. Throw the stochastics oscillator up there on a weekly chart and just point out all of the signals, all of the bullish signals that you were able to take using stochastics. Now, where are we now? We're way too high. This is not a buying opportunity for lows, right? We're looking at a weekly chart. I'd love to see, the stock price get back to in this $200 range. Stochastics fall below 20, cross above 20, much better entry there. Okay? There are ways to find these stocks, guys. There are different ways to find these stocks. So the next part is, all right, how am I going to find my trades? Let's kind of review. So we first talked about what the market can do, right? It can trend, it can channel, or it can hit an extremely oversold situation. This is the VectorVest composite as of the hard right edge, as of today, December 3rd of 2021. What type of market environment are we in? Well, we're not in an uptrending environment anymore. We're in a free fall. I wouldn't even call this, it's hard to call it a downtrend, right? Because there hasn't been any rallies strong enough to create a lower high. We're in a free fall here, but we're at a support level of $65.44. Yesterday, the VBC, remember I said the VBC formed a really strong bullish harami, very strong reversal signal, but we didn't get follow through today. Buy to sell ratio is at 0.8, MTI is at 0.58. We're not going bottom fishing yet, but when it's time, stochastics is the indicator to use. Stochastics is the indicator to use. Or go look for stocks maybe that are retracing from their own support levels. And there are different ways to find that. You can go through a list. You can go into the viewers here and just look at any watch list and just go through the charts, right? That's the one-by-one method. That takes a while. All right, that takes a while. My preferred method is to use a tool that we have within our VectorVest real-time program called ProTrader. It has scans that look for moving average crossovers, among other things. MACD, retracing resistance, retracing support, breaking resistance, breaking support, stochastics above 20, stochastics crossing above 20. Okay, this is my account, so I have a few different variations of stochastics crossing above 20, but just a simple scan. I want to find stocks whose stochastics has crossed above 20 in the past day, and boom, just like that. You have a list of stocks. If I open up our charts, list of stocks, I got to add our stochastics parameter to it, whose stochastics has just crossed from below 20 to above 20. Take a look at the stock. Take a look historically. Were those good signals when the stochastics oscillator crossed from below 20 to above 20? Stochastics crossed from below 20 to above 20? Were those good signals? Were those profitable signals? They were. Not every one is going to be a profitable signal, but we're seeing that situation now, and I can just go through every single chart. Every single one, the stochastics today has crossed from below 20 to above 20. Now, I'm not saying, guys, with the market in the environment that it's in now, that you should go out and buy stochastics, bullish stochastics crossovers. I'm saying when the market truly does find a bottom and the rally is confirmed by another up day, right? If we get this another explosive rally, maybe Monday, right? If we start to see some follow through after that, then that might be a time to go bottom fishing and use that scan. But that scan there saves you a heck of a lot of time. Okay? Just going to fast throw through my charts here. Okay, just these slides, guys, that you will have. I'm going to put them into the handout section here in a moment. Just have all the things that I talked about, including our watchdog tool. The watchdog within our real-time program is in a real-time alerting system, real-time alerts. So you don't have to even go into Unisearch and run scans. You can just set it up in the watchdog and it runs all day for you, and it will send you an email or text message when a MACD crossover, for example, occurs. Get that text message, get that email, take a look at the stock, make sure it's continuing to move higher, and you're able to trade it that way. How much time would that save you, right? How much time would that save you? Yeah, Alan says, are these indicators good for buying and selling, buying calls and puts? Absolutely. Okay, Gerald, I can see your question. Everybody's quote muted because we can't have everybody speaking, right? That would be a little distracting, but I can see your question. If you do have one, just shoot it in the chat box there. Okay. Now you showed up today. I'm going to take a few guesses as to why you guys showed up today. You want to learn how to effectively use popular technical indicators in your trading. You wanted to see how you could easily scan for stocks that meet certain technical patterns. And you wanted to see how VectorVest can alert you of these possible trades. So today what you learned is to match the market to your indicator. I'm going to flip that around. Match the indicator to the market, because you have to recognize what the market is doing first. Okay? Then use the appropriate indicator. Today you learned how to effectively use just 3 very popular technical indicators, and I showed you guys within the Unisearch tool in that Pro Trader folder how to quickly and easily find trading opportunities. Very quickly, very easily. You can do it the one-by-one method, and there are so many faster ways that will save you a heck of a lot of time. The big lesson, technical analysis can help anticipate, there's that word again, future direction, and you can find some great trading opportunities, especially if you use the power of speed. So how can I get started using technical analysis now? You might be wondering that. You have a choice. You can do it the slow way. Now the slow way is the one-by-one method. It's doable, but it does take a lot of time. We'd rather you do it the fast way. The one-by-one method, you throw up the charts, you recognize what the market's doing. Okay, the market is trending. I'm gonna look at the MACD. Or you can use a scan. This is our preferred method here because it just saves time. It'll scan for stocks that meet the criteria that you're looking for. So if you want to find stocks whose price is retracing from support, there is a scan for that. And then there's automatic alerts. All of this, and this is what's included in our VectorVest Premium program. Fundamental and technical charting, market timing signals for clear entries. By the way, our confirmed market call occurred here on November 22nd. We are a couple of weeks off of our confirmed market signal. So that signal there is saving a lot of people a lot of money. And it's making people money too, because if you start playing the market to the downside, you're making money. So we give you guys clear market timing signals for entries and exits. We provide you in the VectorVest Premium program, with Pro Trader searches. These are those technical analysis scans. The Watchdog, which gives you instant alerts. The Genius, I haven't talked about this tool, but the Genius is an automated real-time portfolio manager, and it gives you alerts as well. We have pre-built automated trading systems, and of course, real-time streaming data for the US market. And the total value of this, we sell this for $149 a month. I want to give you guys an opportunity, for those of you that don't have the VectorVest Premium package, to try it out for 30 days for $9.95. And what I'm going to do is I'm going to type in that address that you guys see at the bottom there, so you can just simply click on it right from the chat box, www.vectorvest.com/capture-trades. Hope I spelled that right. And once you go there, once you click on that site, you'll see the $9.95 trial offer. Okay, Jim says, I'm currently a subscriber. How do I get to set my VV in real time versus end of day? Jim, you're right there with me. Go to www.vectorvest.com/capture-trades. Jim is a subscriber, but he has our end of day service. His data only gets updated once a night. If you want to try out real time for 30 days, Jim, go to that website, vectorvest.com/capture trades. We'll give you the VectorVest premium package for 30 days for $9.95. Okay? Jim says, do you have ongoing classes? Yes, we do. Just straightforward. Yes, we have a ton of different courses and classes. All of them are located in our VectorVest University. Okay? Now, if you order the trial, if you take out the trial, I'm going to throw this in. It's a special stock buying checklist. This is great for those of you who like to be a little bit more hands-on, right? You like to write down, hey, I bought this stock on this day, why I bought it, when I'm going to exit. So it allows you to check off all the boxes, and I'm going to throw this in as well. Look, it's a 30-day money-back guarantee. If you say at the end of 30 days, because that's how long the trial is, I don't want real time. I want to go back to my end of day or my intraday, which is a 15-minute delayed data service. We'll give you the $9.95 back, no questions asked. Okay? So the special offer, guys, $9.95 for 30 days. My email address is Jerry D. That's Jerry, D as in David, at VectorVest.com. If you have any questions about anything that I talked about today, shoot me an email. I work with the real-time program. I'm a swing to position trader myself, and I use all of these indicators. So if you ever need any help, using any of these indicators, feel free to shoot me an email. It's Jerry D, Jerry, D as in David, at VectorVest.com, and yes, I will put that in the chat box. Okay. This trial offer, guys, of $9.95, it's only good until Tuesday of next week. Only good until Tuesday of next week. Okay. Tom says, how do you deal with what appears to be a bullish stock, but it appears so overvalued? Yeah, a lot of stocks are trading at a premium right now, right, Tom? If it's a good company, if our VectorVest indicators, particularly our relative value and relative safety, are good, above 1, I don't mind buying an overvalued stock. It's a solid company. They do a great job of growing their earnings every year, every quarter, right? Stock price goes from bottom left to upper right. If it's a little overvalued, but the indicators are good, I don't have a problem buying it. Now, if stock is overvalued and it has poor fundamentals, then I'll shy away from it. So that's how I treat overvalued stocks. I make sure that their fundamentals are good, and then I don't have a problem buying them. All right, guys. All right, email me if you have any questions. Again, it's jerryd at VectorVest.com. I had a great time today. It is Friday, so have a great weekend, guys. Oh, yeah, the slides. I apologize. Give me 1 second. The slides. I'm going to put them in the handout section here in a moment, as soon as I find them. Let me see. Are they on this monitor? It is. Perfect. Okay. In a moment, you're going to see in the chat box, or the handout section, it's going to say 3 Techniques webinar. You should see that in a moment. It looks like you guys should see it now. And if you are joining us via YouTube, you'll get a copy of the slides as well. Everybody see that? 3 Techniques webinar. It's in the handout section of the GoToMeeting control panel. Jim says, well, I will automatically build at the end of 30 days. Yes, you will. Just let us know a few days prior if you do not wish to continue, but it does automatically convert into a monthly subscription after the trial. Just give us a call before that if you do not want that to happen. Or if you want to save some money after you try off the program for 30 days, say, I'm using all this stuff, I'm making money, I want to continue, but on an annual basis, you can save some money that way. All right. Jim says, see it. Yep, it's in there. Handout section, 3 Techniques webinar, and it's a PDF. All right, guys, have a great weekend. Look, let's hope for better days next week. We need this market to settle down and begin to rise again. All right, guys, have a great rest of your day. Have a great weekend. We'll see everybody soon.